I'm Charlotte McLeod with the Investing News Network, and here today with me is E.B. Tucker, Director at Metalla Royalty and Streaming and author of the book, Why Gold, Why Now? Thanks so much for being here today, E.B.
Thanks for having me.
All right, and of course we had to have you today. It's a historic day, or I guess rather yesterday was. You've had yet another of your calls for the gold price come true. So just some background for people who may not have been following along. Last year, you told us that we would have $1,500 gold, which we did. After that, you said that this year, gold would take out its all-time high, which just happened yesterday. We've spoken about this before, but I think I need to ask again. As you made these calls, what went into your thought process? How are you feeling now that we've reached this level?
Well, now the advice, which I mean, everybody treats this like guessing the weight of an animal at the state fair. You know, where how much does it weigh? 1,000 pounds? I don't know, and you win a prize or something if you guess. It's not really like that. I mean, the reason why we found these markers was that 1,500 kind of became this base to go from, and then 1,900 is now an area where, as professionals, we let it run. I mean, this thing is going to run. So I mean, you're going to run. The people don't own gold. I mean, they just don't own gold. And if you don't believe it, take a survey. Now, I mean, don't do this at the PDAC conference, but I mean, in a regular setting, to say, does anybody here own any gold? I mean, it may be one person. I mean, most people don't have any. And so what does that tell you? I mean, who's going to be the seller? I mean, who's going to sell to make the price go down? I mean, I don't know. Central banks are buying. Smart people are buying. Rich people are buying. I mean, I'm having people call me that 2 years ago thought I was some sort of caveman. What do we do now? And a lot of it's because they read this book. I mean, Charlotte, this book has all the whole roadmap is in here.
Mm-hmm.
And I have people call me up. What do we do now? It's in the book. It's all happening. It's all happening. It's dominoes. And look, we're in the first inning of this thing. This is the first. You haven't missed. Get your seat, because you haven't missed any of the game. It's just starting. So there's a lot more to come. But right now, what you do with your gold is you let it run. Silver is much more exciting. Silver, I mean, you see what's happening. It's 2460 is the high today in the spot market. Silver, I mean, it'll go up close to 30 before there's any trouble. And then you have some sort of pause, and I don't know, we'll have to see what it looks like there. But I mean, nobody's in that trade. We took derivative exposure there in April. Nobody's in that. That's very exciting. I mean, silver in the last bull market, silver went up 1,000%, 10 times, and gold went up something like 330%, something roughly like that. I mean, it tripled the performance. Silver's got a long way to go. In the book, one of the things I cover in the book that people liked a lot was when to sell. I mean, that's you forget about like, we'll tell you the target, it'll hit it. But I mean, when to sell, that's the bigger question. I mean, even the best traders struggle with when to sell. One thing I recommend people not do is to take profits because they think something's expensive, and you'll never get back in. I see this all the time with Metalla. We started Metalla at $1.20 Canadian. It's $8.99 right now. You can see it up behind me. I mean, I think it's safe to say I think we can fairly call that 9. The company is on a great track. I mean, it's all about being able to get these royalty deals done, which takes an eternity. We've got 52 assets or something. It's going to keep started at 0. This was 3.5 years ago. But here's my point. I watch people all the time. Oh, it's too expensive. I'll sell it and they never get back in. So you get your position, let it run. Just let the thing go. You'll know when it's time. We'll talk about it. The indicators I talk about in the book will start showing up. And I don't think that's going to happen for a while now.
Okay, yeah, and that touches on something else I wanted to talk about, which is I'm seeing on Twitter, elsewhere, people who have been in the gold market for a while are feeling nervous right now. Like, they're not happy that the gold price is going higher. They've been burned before and they're worried about what's going to come next. So what would your message be to those type of people?
Stop thinking about it. You got to remember something in the market. What the hardest thing for people to get over is they have like an abused dog at the pound. I mean, someone's going to adopt you and it's going to be great. It's going to be a new life. I mean, markets are all about psychology. And I have the same, you're spot on with this. I have emails right behind you with people that bought gold at 15, 1600, 8 or 9 or 10 years ago, and they want to sell it. No problem. I mean, this is going to happen. People are going to want to do it, but we'll buy it. I mean, that's the thing, because we try to have a fresh set of eyes. I mean, if you opened up the gold world for the first time today, your conclusion would be this thing is going a lot higher. I mean, so you wouldn't worry about, oh, well, I paid, this much in 2011, and I sure am glad to get out, with my cost back. That's totally static. I mean, you're looking at a situation based on your personal experience. So anytime in the markets, you're going to get in a lot of trouble if you're looking at your personal experience. I mean, imagine if you said, I'm not going to buy Amazon because they delivered the wrong package one time, in like 2003, and I'm not going to tolerate that type of customer service. Well, I mean, that wasn't the most objective way to look at that. Okay. So try to have a fresh set of eyes with gold. Ask yourself, would I want to buy this today? Whatever happened in the past is the past. I mean, I understand this. I mean, silver has been a really difficult metal. But when I look at it holistically, it always takes 2 years to kick into gear. I mean, did this in 2003, 4, that area, did this 2009, 10, it's always like this. And then it massively outruns gold. So if you're just saying, well, I bought all that silver at, 2650 or something, forget about that. I mean, what's going to happen now? Silver's going to go to 100. It's not going to go to 100 this month, but I mean, silver's going to move substantially before it runs into any trouble. And then it's going to cool off, and then it's going to run again. And people are going to say, well, surely it can't go any more. Wrong. It can go much more. Remember, it went to $50 in 1979, 80. And it went to $50 in April 2011. It's going to go much higher than $50 this time. It's going to catch everyone by surprise. So what do you do about that? You figure out your trade. You get into the trade you're comfortable with, and you just let it run. Let it do what it's supposed to do. Now, you'll know when to sell. We have the indicators we use in the book. You'll know. It'll start looking wobbly, and you'll say, this is a good time to take this off the table. But looking at saying, I paid this years back, that's a terrible way to do it.
Okay. Now, I also want to talk about some of the factors that are behind these moves in gold and silver that we're seeing, just briefly to recap for people. I know it's in the book and we should definitely read the book, but you've talked extensively in the past about money printing, those kind of things. Right now, what is the main thing driving gold and silver?
Look, I know this is going to be hard for people to understand, and a lot of people that are my peers in the money business take a huge amount of disagreement, with me on this. But what's happening is there's too much money. So everybody thinks that means there's going to be inflation. No, it's not. It's going to be deflation, which let me explain that. It means all these assets, you go to Vancouver and you look at these $1 million studio apartment in the middle of nowhere. I mean, all this stuff's bought on credits. There's too much of all this stuff. There's too much. There's too many things that were built with cheap money. And what that means is that it compresses down the rates of return. So you end up with this asset that you bought with free money, 1% money, 2% money, whatever. You see the US 10-year treasury at 0.6%. I mean, it's really crazy. Too much money, because they kept having to put money into the system, more and more and more money to bring it back to life, so that the debt could continue to be solvent, like people could pay the bills for their debt. So the long-term effect of this is you're just awash in money. There's money everywhere. It's too much money. Well, what happens is that the things that you own start to go down in value a little bit. And the things that you need start to become more expensive, because you actually have to buy the equipment to make the thing. It's everything is changing. We're at this point right now where things are changing. So it's not so simple as they ran a printing press with too much money. They created so much credit, and look what they're doing now, creating much more credit. So they're making money even cheaper. Now, eventually, as we say in the book, the cost of the money is going to be negative. I know it's hard to understand, but there is a reason why this is going to happen. And this is my prediction, by the way. And it's because the central banks need you to spend money. You have to spend money. That's why all these programs, to counteract the COVID shutdown, is all about get people spending money so that the system doesn't seize up and lock up. Okay, so you have 100 grand in savings or something, and the bank starts charging you to keep the money there. You're going to spend the money, or you're going to put it into the market and speculate, or you're going to try to speculate in real. You're going to do something with that money. You're going to have an adverse reaction to being charged for it. I mean, we go through all this. This is what's going to happen. Is like dominoes. You've only seen one or two of the dominoes. There's so many more to come. So we walk through what that looks like. It's the central banks become increasingly desperate to be able to get the system to stay afloat. And so you'll see them do more and more dramatic things. That's the whole beauty of gold, is that it's the only asset that you can buy, that I know of at least, that's outside of that system. And eventually you'll sell the gold. You won't hold the gold for 1,000 years. I mean, there'll be a time where there'll be a reset, and you'll want to acquire assets, probably at very good prices.
Okay, so you put a lot of effort into helping people understand these difficult concepts, and you published your book recently, just a couple of months ago, I think. Are you finding that it's connecting with people? Are you having people take your advice?
An unbelievable amount of LinkedIn messages from people saying thank you from all over the world. It's actually very nice. I mean, because the book was written for people, average people, to understand complicated concepts. So it wasn't meant for people in a Colorado School of Mines or something to understand. I mean, this is meant for you to be able to say, hey, you have money, you're working to get money to have a better life. This whole concept is in trouble, and you need to think about it for a minute, and you shouldn't be bored. So it's all stories of things that I've seen and done, and dinners, and being left in the middle of Mexico, and all kinds of bizarre things along a 2-decade journey. It's 2 decades of all this stuff. So, I mean, I think people it opens their eyes a little bit. They understand that you can do something about it. It's not too hard. It's very easy. I mean, I also told the story of Metalla. I mean, it's really interesting how it all came together. I mean, I met Brett Heath by accident over a decade ago, at the Hard Asset Conference in New York, which doesn't even exist anymore. We were sitting on the front row, didn't know each other, and asked me some question. We'd talk afterwards, and that's over a decade ago. We've been in business together doing various things, but what happened was we managed money in the gold and silver stock world, and we knew these stocks inside and out, and we found that royalties were far and away the best investment, and we figured out that there were hundreds, if not thousands, of these royalties out there on all kinds of different assets all over the world, and people and companies own them. And we came up with a way to go around and to buy those existing royalties. I mean, we're not financing mines. Now, why am I telling you this? It's very important, because when you start getting these royalties, you have a claim on lots of ounces in the ground. They're not going to come out of the ground for 2, 3, 4, 5 years. And you bought these royalties when the gold price was 12, 13, 1400. And now it's 1900. So every single ounce in the ground is $500 more, and cost of your royalty doesn't go up. So what happens is you get this massive lever, and you're moving a tremendous amount of wealth, and people need to see that. And so in the book, I'm like, this is why we started the company. It's 3.5 years ago. Stock started at $1.20, now it's almost $9. And the point is not like the next hot speculative stock. It's not like that. I mean, I tell the story of Franco-Nevada. They bought a $2 million royalty in Nevada in the 80s, and it's going to pay out over $1 billion in cash, and that's over 30 years. I mean, this isn't the hot potato stock where you get in and get out in a week or something. This is a business. It's the best business in the world. I don't know of any other business that's more valuable than the royalty business. I mean, Franco-Nevada has over $1 billion in market cap per employee. I mean, that's so much more than the tech companies in the US. And I mean, you wouldn't believe it, and nobody really understands this business. As an investor, that's what you want to see, because no one understands. They will understand it. Once they understand it, it's too late. You got the guys in New York, they don't even know what this is all about yet. So when you unleash all those people, a lot of the opportunities are gone. It's not too late for that. I mean, that's the thing with the book, is that you got to pay attention now. Why gold? Why now? It's not why gold, why in a few years. It's now. Now's the time, and it's not too late.
Right. So definitely you've got all these strategies that people can follow, lots of advice for them. I need to ask if you have, going forward, a new gold price prediction with the timeline attached to it. So you've given us these two accurate calls in, I guess, the last year and this year. So we have to ask what could be next.
I don't mind you asking. Unfortunately, we're letting it run. I mean, we think that it can run into the 2000s, and we'll wait to see when it runs into trouble. So we're long and we're watching. I mean, it's going to move. It's moving. It's going to move right into the 2000s. It's going to get mainstream press coverage. We talked about this before. People don't know what they're doing, so they don't know what to buy. That's all really, they're throwing money all over the place trying to figure out how to buy it. That's very good. I mean, think about it. It's a really big opportunity. There's only about $12 trillion worth of gold on the whole planet. So it's not much gold. I mean, honestly, it's a really small amount. And for that to be able to go up, 30% from here is kind of a no-brainer. I mean, this is, say it turns into 16 trillion worth of gold. It's nothing. I mean, I think there might be 300 trillion worth of debt at the end of the year. I don't know. The numbers we quoted in the book were 255 trillion as of the end of last year. And what's been happening this year. I mean, it's really wild, the debt growth. So, I mean, you start thinking about 16 trillion worth of gold, 300 trillion worth of debt. I mean, that's $1 worth of gold for every $20 worth of debt. And the debt can't survive without more debt. I mean, this is a really unique situation. It's once in a lifetime. I mean, honestly, this isn't going to happen again. Believe me, this is just once in a lifetime. And this is the chance people have to see what's coming. I don't think many people will take it. They'll sit there and say, boy, I really should have done something about that. I knew there was a problem when all this was going on. I really should have done something, but I guess maybe next time. I don't think there'll be a next time.
Okay, so I want to take a moment to take you back to silver, which you've been talking a little bit about, and we haven't really had a chance to go in the past very in depth in silver. So I wonder if you could talk a little bit more about the silver story and what the potential is there and what the move upward for silver could look like, because it has kind of a bad well, maybe not bad, but a less good reputation compared to gold just because of the volatility. I think maybe that makes people a little apprehensive.
For good reason. I mean, it's not been a very good trade. I mean, you went from low single digits last decade to 50. Let's call it $4 or $5 pretty much to 50. I think that's fair. You could have bought it a little cheaper maybe, but pretty violently. I mean, you went, when it went in a hurry. Silver's speculative. It's got a history of doing this. I mean, it did this in the 79, 80, and it went up dramatically in the very end of that market. It went crazy. And then it crashed, went down to like $2 or something. It's really a disaster. So I think it's fair to think that silver is not to be trusted. But we don't care about what happened 40 years ago. We care about now. And in March, the price went down under 12. I was in the futures market prior. It was untradeable what happened. So it went down to 12, and at the same time, the coin dealers that I know told me that they couldn't get any coins, and if they could get any, they needed to charge $9 or $10 a coin over the spot price. So that means the price was quoted 12, and the price for an actual coin was like $21, $22 at least. That's not right. Something's crazy about that. Now, the next thing I know is that from Metalla, we know what everybody's up to with mining. And we didn't know of but a handful of mines that could even function at $12 silver. I mean, it would maybe a giant base metal mine or something. I mean, I guess, but unsustainable. So you combine bad reputation, bad 7 or 8 years of straight down, no break even in between, No company can mine it. Well, this is all stuff that you look for when you're about to see a rocket ship take off, because this is a washout. Everybody's quit on it that can quit on it. Okay, so that's important. And as a trader, you know, we're traders. We're in the money game. I mean, that's the deal. You know, we're not getting hung up on worrying about that you paid $30 for a bar of silver 10 years ago. That's irrelevant. You know, this thing is going to 100. And so what's going to happen from here is that the price is going to go up to the high 20s without much trouble. And I know you say, well, that doesn't do us any good because it's already 24.50 or something. And that's almost a 20%. That's almost a 20% move. I mean, I don't know if you buy treasuries for U.S. Treasury for 60 basis points, you know, it'll take you 30 years or something to make that much money. All right. So silver is going to move, and it's going to do that by the end of the year. Now, I don't know what happens from there. I mean, it could run into some trouble. I mean, it's heavily leveraged. So you have to be careful. I mean, you get to a certain point and you know, there's hedge funds and traders, commodities traders that take heavy leverage on silver. So it's possible you could take a break there. But what we're looking at, and what I would say to people watching is look at that chart and see if from here to the high 20s, you know, that's coming. Maybe it's a month or two, but I mean, it's this year. Okay. So, I mean, we're looking for that this year. I mean, we'll reassess when it gets there. And then how do you trade it? Well, there's not a lot of silver mining companies. I mean, there's not very many of them. I mean, I don't want to name names because there's only a few. And if I miss one, I won't get invited to dinner next time by one of the executives. But I mean, it is not very many. What I think is an option is to look at, you know, you got to look at the physical product in the market, you know, SLV, which is not that great of a metric, but I mean, you can buy options on that. You know, you can buy 2-year options on that. You know, so I mean, that's something you can look at. You know, and if you look at SIL, the ETF, or SILJ, I mean, Metallo just got added to SILJ. It's a decent ETF. It's very small. You can look at the companies with silver exposure in that, and you can pick through them, and you can decide what you want to do. I mean, that's what we did when we managed the fund. We break open the ETF and pick out the winners by studying the companies. I mean, you can look at the top 20 holdings and pick through and decide which companies, you know, suit you. But try not to think about what's happened in the past, because the markets don't work that way. They don't work that way. That's not how things go. You know, you don't say, well, if it happened for 10 years and then it can happen for another 10 years. It's not that way. There's indicators. You got to look for indicators, and the indicators, when all the companies can't make money and the dealers got to charge you double for the coin. I mean, and everybody hates silver. I mean, that's pretty good. That's what you want to see. That means there's nobody left to sell except for the big boys, you know, that are going to be trading. That's what you got to watch out for. But I don't think that comes in for another $4 or $5.
Okay. We're coming to the end here, but one theme you seem to keep coming back to is encouraging people to be in the now a little bit more and not pay attention to the bad things that happened in the past, or at least not let them hinder what you're doing right now. And I don't know if we've talked about the millennial investors coming into the market, the Robinhood traders that seem to be being talked about in not just in the mining space, but in the overall investing space right now. Do you think they almost have an advantage right now from being new compared to people who've been here for a while and they've watched so many things happen?
They have an advantage today. I think they're in for a real education. I mean, think about most of the people when they talk, we're stereotyping. Okay, so we're saying that you're a Robinhood trader. We're stereotyping you as a millennial, but it might not be true. I mean, you could be 60 and you just downloaded Robinhood for the first time. So we're not trying to offend anyone with our stereotyping, but there's a lot of people with limited experience. I mean, I have a friend. This is CPA, and he was telling me that he's trying to make 20% a week. And I said, 20% a week? I mean, are you kidding? I mean, that's what the mob makes, breaking people's legs. You know, I mean, this is unheard of. Okay. He said, yeah, but I mean, I don't have time to make 20% a year. So, I mean, you can listen to these comments, you know, and you record them in your mind and you think, okay, that's a sign, right? Because remember, at the end of the Depression, everyone was disgusted with stocks. They didn't want to own them ever again. Forget about it. They would tell you, listen, you're going to lose all your money if you buy that stock. And that wasn't true. You know, the stocks had PE multiple of 5 or 6 and dividend yield of 5 or 6. And you could have just bought them with all your money and never done anything for 70 years. And you would be fabulously wealthy. Some people did that, not very many. Okay, so we have to look at this cohort and say they were raised with push a button and get a package, and push a button and get a movie, and push a button and get all the stuff. Now they're push a button and get 20% a week. So it's unsustainable. I mean, you have to be very careful, because what you want to buy if you want to make money, you talked about be in the now. Okay, this is very important, because whatever happened in the past is finished. It's over. I mean, of course, you want to think about what you did and learn from your mistakes. This is important, but then let it go. Forget about it. It's like going down a river. Whatever happened before is over. Now, what is coming ahead is not quite here yet, but it's coming. So the trick in the markets is to do something for what's coming ahead. I mean, when we bought silver, you know, we put silver trade on in April, we felt a little crazy. I mean, it wasn't really doing much, you know, so we're starting to lose money. You know, every week we were losing money on the trade. So derivatives trades, they were losing money. Even very smart people that I know, very smart people, that they were saying, well, it's too early. And I was thinking, man, I hope we're okay here, because I mean, then all of a sudden, boom. So we knew it was coming. We didn't know if it was 6 months or 6 weeks. We knew it wasn't 6 years. So I would encourage people that are new to sit back and say, what is ahead? And then how do I position myself for what's ahead? So, I mean, buying a crazy company that might never have a virus cure or something, that this is a tiny 10 million market cap company, I don't know that that's a great idea. I mean, if you get a quick move in that, you know, that's probably good luck. But when you look at what's coming, you know, ahead, and you see what's going to happen, what's likely to happen, a lot of things that are coming ahead are very obvious. So you want to buy things that benefit from what's coming, and you want to be patient, because believe me, 20% a year, if you can keep that up, is enough money that you can't spend it. You cannot spend, if you make 20% a year for a sustained period of time, you will double your money so many times that you will not be able to get rid of all the money in your lifetime, believe me. So people need to realize that 20% a week is like a fantasy. I mean, you can't, it's not, even people that are exceptionally good at this, in this business, they wouldn't even think of even being, they're scared off by even the prospect of it.
Okay. All right. Any final thoughts you would leave us with today?
It's not too late in the gold trade. Believe me, it's still early. I mean, get a copy of the book. You know, you can get it Kindle all over the world. Why Gold, Why Now? You can get it paperback, soft cover all over the world. You get Audible. You can listen to it on Audible right now. You know, it's me reading the book. And look, I mean, take it to heart. This is your chance. I mean, you can see what's coming, and you need to know what to do about it. And you look back and you say, yeah, I mean, I called that right. I mean, the average person can do this. You know, you have money, you're wealthy. Even if you have a little bit of savings, you're wealthy. Most people have no savings. So it's time to pay attention to what's going to happen to that.
Okay, well, thank you so much. Thanks for taking the time to talk today. It's always great to hear what you have to say about gold and precious metals.
Thanks, Charlotte.
Thanks. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Evie Tucker with Metalla Royalty and Streaming, and author of the book, Why Gold, Why Now?